There's too many soybeans out there. The exports are poor.
Hi, once again, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. Always good to have you with us. As always, I want to encourage you to go ahead and like these videos, subscribe to the videos by clicking on that bell icon down below, and share these videos with others as well. Today, I am pleased to welcome aboard Matthew Kruse, the president of Comstock Investments. And I thought we could take a closer look at the USDA numbers that came out during Monday's trading session. Now, they came out right in the middle of the trading session at noon Eastern Time and 11 o'clock Central Time. And I want to go through some of these data points here with you, Matthew, and get your thought on this. Let's take a look, first of all, at the crop production numbers that came out. I want to get your thought on this. What jumped off the page at you when these numbers hit the wire?
Hi, Marlin. So, I think the biggest thing that people were looking for, of course, was the yields. That's what traders were expecting, that we're going to see an update in yields, and we did get those. They did increase those yields the way they were expecting, but a little bit more than what the average trade was looking for. So last month we're at 181 for the corn yield. The trade was looking for 182.1, and the USDA placed them at 183.1. So quite a big jump in yield there. The good news was that was offset by a reduction in harvested acres. And so last month they were at 83.3 million acres. They reduced it about 700,000, a little over 700,000 acres. And you combine that with, they actually increased the export usage by 75 million bushels as well. So you taking that all in consideration, we actually came in about 24 million bushels that they took off ending stocks. It was actually I would say at the very least a neutral report for corn, taken into the context that we've been trading lower leading up to this report, and the fact that we're probably so heavily low so heavily short with the managed funds right now. It could even be argued that it's a slightly friendly report as well. The same, it can't be said the same for the soybeans. They kind of traded in opposite directions. That they had a yield pegged at 52 bushels per acre last month. They came in with USDA at 53.2, so a little bit higher on the yield at what the average trade was looking for. But just the opposite, the trade was expecting a modest yield harvested acres reduction, and we have just the opposite, where they actually added 1 million acres. And so you combine those two, 1 million more in soybeans, 700,000 less in corn. We actually added 300,000 planted acres overall in the grains. And so that kind of set prices in opposite directions. They were both trading down before the report came out. I'd say we closed December corn up 6.5, and we were down in November soybeans 16.5. And so I know they were down let's say about 20, almost 27, 28 cents at one point in the beans. And so kind of very negative news in the beans. No good news there, but hopefully we're finally finding the bottom, at least in the corn.
All in all, though, I look at it and they did close well off the lows. That had to be at least a little bit encouraging anyway, right?
Well, again, I think in the corn, we're now down to the last 2 weeks, maybe 3 weeks of critical weather here. And so and the forecast looks to be pretty decent going forward. There should see some scattered showers in the next week to 10 days around the majority of the Corn Belt. So there's not a lot more fundamental news that I think the bears can point to want to drag this market lower. Going forward, I think eventually it comes down to the managed money, and that we know that we were heavily short. And so eventually they're going to have to get out. Eventually they're going to have to cover those shorts, and we think that will help ignite a rally, at least in the corn. The beans now, I'm not so sure. Last time we talked, I said it was a lot more negative. The beans, we're now back to on ending stocks for soybeans. We're at 560 million bushels. So we added 125 million bushels more in the soybeans, which was quite a bit more than what the trade was looking for. Not that long ago, we were at 200 million bushels. And so I'm still kind of disappointed in the beans. And I'm also concerned about Brazil's crop that's, they're going to be planting here not too far away.
Good point. Isn't it true that the marketing year ends at the end of August for corn and soybeans?
Yes.
So we're getting close to that already.
Yep.
Corn, we're going to come out ahead of schedule for exports. Soybeans, not so much, right?
Yeah, soybeans were quite a ways off from what the USDA had us pegged at. I think we're basically at those 2019 lows is what we're tracking, and so and I don't know why that's going to change ultimately. Things do look a lot better for corn. Um, the USDA is quite a bit more optimistic. But again, we're now entering into the more of a seasonal time period when corn's harvest is hitting the market, and so there you can find some cheap corn in Brazil that they didn't have in the first half of the year, and so I think it's going to be a lot more competitive here now between Brazil and the U.S. in the second half of 2024.
So to open this podcast, we were talking about the acreage, and I want to get your thoughts on this. Here is a map that you have put together. It's from USDA, but it shows where the gains and losses were in corn acres here. What do you make of this?
Yeah, I think this is in bushels, right? In bushels would change from previous
Yes,
year,
I'm
and
sorry.
so
Corn yield.
yeah,
Yeah.
yep. So the first thing that sticks out to me, you look at Illinois, 225. I mean, that's got to be a record, I think, for at least for Illinois, maybe for all states. It used to kind of go back and forth between Iowa and Illinois, and they've kind of left Iowa in the dust this year. But Iowa and a lot of the other surrounding states still have pretty respectable yields. You can see kind of in Ohio that it's down. We've heard about some issues there, but even in Indiana, they're going to have a great year. You look at Wisconsin, it's just that there's been a lot of problems and issues in Northwest Iowa, but pretty much every other place outside of Northwest Iowa looks great. And I've traveled all the way across I-80. I've gone up I-35 into northern Iowa, and so for the most part, they're gonna have a great season, and so hopefully that offsets some of these lower prices that we're experiencing right now. But yeah, you could see there's a lot of blue on that map, and all the red is kind of contained to those southeastern states that just don't make up as much of the pie anymore. And so, but it's Illinois. We've been hearing for a long time is the best that they've ever seen, right? I've heard that phrase more than once, and so this kind of adds fuel to that argument.
I was kind of surprised at the extent to the drop in yield in the eastern states, though. All around the eastern seaboard, all the way down to Alabama there. My goodness, they really did have a significant drop here this year.
Well, you lived in North Carolina for a time. Maybe you could shed some more light. I don't know if some of that was due to hurricane season or too much heat, but I knew Ohio was having some dry issues and seen some complaints from them, and so that kind of makes sense. But some of those areas in the Carolinas, I don't track quite as much.
Well, I know early in the season they had a lot of heat and dryness out there, and now here in the last couple of weeks they had all kinds of rain and all kinds of flooding, but it's too late.
Yeah.
North Carolina historically is maybe the second fastest harvesting state. I mean, in order of getting started and getting finished. And so, I mean, at this point, it's pretty well the horses left the barn
Yeah.
for corn production there. And even if they get hurricanes now, I mean, the moisture won't make any difference. It may blow it down, but that's about it. We also had the numbers that came out for soybeans. Now, here again, there's a lot of blue, but it maybe shifted more toward the southwest. Did that
Yeah.
surprise you?
This almost looks like the electoral college map, but it doesn't have red and blue. But no, it's yeah. In the South, they're going to have real good years, and I was actually looking at some of the major increases in production, and Kansas stuck out as one of the places that in both corn and beans they increased their production. The USDA did for Kansas by quite a bit, and so you don't. Maybe a little bit in the corn, but you don't think Kansas is mattering quite as much in the case of soybeans, but they did at least this year.
Well, let's jump over then to the ending stocks panels and take a look here. First, we'll start with the old crop. Corn stalks, 1.867 billion bushels. What do you think of that?
Well, they decreased those 10 million bushels overall from in the corn stocks from the previous month, and so not a huge difference, but let's see. I think they increased the exports. That was probably the biggest thing again, and so I wish they would have come with this information quite a bit earlier. I feel like they kind of had access to it, but in the case of the soybeans, there really wasn't much that was changed. There's some modest minimal changes to seed usage, but the ending stocks there didn't change from last month, and so. So that corn reduction or increase in exports from last old crop kind of carried over then to the new crop, and that kind of helped improve the new crop balance sheet a little bit.
And there again, in about 3 weeks, this will be kind of a moot point as everything will roll over into the 2024 and 25 growing season, the new crop. So let's take a look there. Now there, USDA still predicts over 2 billion bushel carry on the corn. That's still plenty hefty, isn't it?
Yeah, 2 billion. Anytime you're over 2 billion bushels, I mean, it's still quite a bit. But it was down from last month, which is good news, and below what the average trade estimate was looking for. And so I think we could see a little bit more follow through this week in the corn prices, but I don't know that this is going to be anything that's going to ignite some major rally that we can all get behind on. I think a lot of it's just going to come down to when can those that manage money get out, and they're going to have to get out eventually, right? I don't know if they're going to want to wait till farmers kind of capitulate here on their old crop inventories and dump that on the market, but that could be something that still as well is going to weigh on the market. But in the case of the soybean stocks, that's very negative. Historically, it's well above average, obviously, and it was a big jump from 1 month to the next. And so I know we bounced off of 11 cents, I think, off of our low, but we've talked about in the past of a kind of a bottom target, I think, of November beans of 9.19, and unfortunately, I think this just added more fuel to that argument that there's more chance that we could still go lower in the beans, but I don't. I just see the corn as probably more neutral overall. Hopefully, we can drift higher a little bit, but I don't think that there's much argument left for bears to want to drag this thing lower in the case of the corn. But I also don't know that it's going to take off here either and move that much higher.
Yeah, on the soybeans, higher than even the highest trade guess. And that was a bit of a shock to me. It's no wonder we had such a knee-jerk reaction there. Where did they come up with all those bushels anyway?
Well, it came from they increased the million acres, and that's what the trade was not expecting. They're actually expecting to increase it, I think, like 150,000 acres, and they magically came up with an extra million acres. Now, that's not to say that they still can't make adjustments. They can make adjustments to these acres as time goes on, but this is what the trade has for now to work with, and so it was kind of disappointing, that we, of course, we're in that Northwest Iowa area, and so we're cognizant of what's happened with all the flooding, and so we were expecting a net loss in harvested acres, and they actually added 300,000 acres overall, and so that's what was surprising and disappointing. It's so we could see corn and beans kind of trade in different directions right now, where maybe corn stays flat or drifts higher, but I think with these ending stocks the way it is, that's just going to continue to put a lot of pressure on the market.
I thought it was interesting where the wheat number came in at the lower end of expectations there, and we do hear about the problems they had in France and Russia and Ukraine in their growing season this year. It wasn't really a red letter year, was it?
No, and again, I think that this, corn and wheat like to trade hand in hand a lot of times, and so I think that we also saw wheat bounce off its lows a little bit, and so it's hard for corn to take off. Wheat can act kind of like a weight around its neck, and so hopefully we can see a bounce here as well in the wheat based off of what we saw today. We reduced the ending stocks by around 30 million bushels, and it was quite a bit below what the average trade was expecting, and so. So I think that's also another positive that the corn traders, corn bulls can look forward to as well.
Well, speaking of the world production on the wheat, let's go ahead and take a look at the world ending stocks estimates then. And on the wheat here, it looked like the trade about nailed it right on the head for the wheat stocks there. USDA pretty much agreed with them on that one. So that wasn't much of a surprise. Corn was maybe just a little bit light, another slightly friendly number there.
Yeah. Well, you look, what calls out to me on this, Marlin, is you look at where we're at from last year to this year, and the corn inventory situation really has not changed all that much. It went from 309 to 310 right now. And so, that kind of gives more argument that, things aren't quite as negative as you would think in the case of the corn. The demand is very strong. Yeah, and so that while we produce more corn, I should point out that they're estimating the second largest corn crop of all time, but yet global stocks haven't gone up all that much. And so, but the same can't be said for beans. You look at where we were at last year, 111, and now they're targeting 134. It's too many soybeans, and it's probably only could get worse here. If Brazil has a good crop here next year, which they can start planting in Mato Grosso next month already. And so, so I'm more. That's why I'm more friendly the corn than I am the beans right now. I think there's, we'll see how the season wraps up here, but coming in towards the end, there's too many soybeans out there. The exports are poor. The crushings are good, but it's it kind of gets offset by the lack of exports, and so overall the demand just kind of stays stagnant.
Well, of course, you have direct connections with production in Brazil. Do you think their acreage is going to pick up a lot this year, or can you tell?
I don't think it'll pick up too much. We've talked about in the past that their historical growth year over year is like 5.4% over the last 20 years. And I think it'll be below 2% this year. It'll probably be something because a lot of these plans that they have for growth get put into place, years in advance a lot of times. But I think it'll be, flat to 1%, somewhere in that range. But even then, they're at 113 million acres. You add 1%, it's still over a million acres that they're adding. And so, even in a normal non-weather threatening season, they could have 167 to 170 million metric tons of soybeans next year, and it's going to be too many soybeans for the world, as you can kind of see there that we already have pretty heavy ending stocks. And so I don't know what's going to happen then. That's going to shift everyone back to corn the following year. So,
well, what about the exchange rate between the U.S. dollar and the real, and also I guess it'd be the Argentine peso, right? How have they been fluctuating lately?
Well, it depends on what time period you want to look at. For 2024, the Brazilian real is something like 15% that it's weakened since January 1st of this year. It's maybe bounced off its lows here in the last couple of weeks, but that's been a positive thing for their exports and for their producers, because it means they get more Brazilian reals when they convert it from the dollar. And so in their domestic currency, they get more for it. It also makes when you convert it back to dollars, it makes their soybeans more attractive and more competitive for foreign buyers when they look to buy that. So, I can't tell you where that currency exchange rate is going to go. But we'd like to see their currency strengthen, but they've had a lot of issues with their government and too much government debt and having trouble paying their bills. And so that's what's happened. It doesn't really have anything to do with their ag sector so much. It's just that they have some other debt obligations that they're having difficulty in fulfilling, and it's kind of weakening their currency. And who knows, it still could get worse. And if you have dollarized products like soybeans that you need to sell, it could be a good thing. But that's kind of where it's at right now.
Seems like Argentina soybean production is back in the game again after really getting hammered for a year. I guess that means they're going to be ramping up their soy meal production again. And I just wondered if you thought that would be bad for the U.S. soy meal market moving forward.
Well, yeah, I mean, historically one of the largest soybean meal exporters in the world. That's what they're known for. And so, we've talked about U.S. crush producing more demand and consuming more soybeans to kind of fuel the renewable fuels industry. And so that's going to generate a lot of soybean meal, and it has to go someplace. And I think we could be at a point where we're going to produce way more soybean meal here domestically than what we're going to need. And so it's got to be exported. And so we're going to compete directly with Argentina in that area. And so, yeah, it's Argentina, they had a good season overall last year. It maybe got clipped at the end. But they're calling for a shift from El Nino back to La Nina in Brazil. And when you get those La Ninas in the southern hemisphere, they tend to be a little bit drier to the southern part of the hemisphere where Argentina lies, and kind of Rio Grande do Sul, the southern state in Brazil, and it benefits more rainfall to the north. So that's where Mato Grosso is. So I know that who's can really say what's going to happen, but I know that La Nina has affected Argentina tremendously. It's cutting their production in half a couple years ago, and so there's a lot of things that can happen yet, but we'll have to see.
Well, I know WASDE garnered the spotlight for most of the day, but I did want to bring up, we had that sell-off in feeder cattle as we got to the close, over $2 lower. I was a bit surprised by the weakness in the grain complex, and then you had the cattle market struggling like it did. Any thoughts on this cattle complex here? It seems like it doesn't have near the energy that it used to have.
Yeah, I think the main concern there is probably demand. Has there been any demand destruction? Because we've been complaining quite a bit about higher retail prices at the grocery store. We're still kind of trying to determine, is this a dead cat bounce here, where we bounced off of our lows but could eventually move back lower, or will it work its way back? But producers have cheap corn right now, and so that's working in their favor. But all the replacements have gotten way more expensive, and they got a lot higher costs locked in as well. And so I guess time will tell.
Well, Matthew, I sure enjoyed having you as a guest today, and thanks for helping decipher all the data that came out from USDA. It's always kind of a challenge when you have that big data dump like that to make sense out of all of it, but appreciate the help. Matthew Kruse, president of Comstock Investments, with us, and that'll do it for this episode. For producer Brianne Hendrickson, I'm Marlin Bohling. We'll catch you next time right here on the Comstock channel. Thanks for joining us on our Comstock YouTube channel. Don't forget, you can also find us on Facebook and TikTok as well. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.